they say the only things in life that are sure are death and taxes. But for a certain kind of an annuity, that may not be the case. Jim Lineweaver is here with news about taking a delayed tax off the table. Jim is a certified financial planner professional with the Lineweaver Financial Group. So welcome back.
Good to see you.
So we're talking about a specific kind of an annuity, but let's just talk first generally about annuities.
Yeah, basically, you can basically break down annuities into two different categories. One's going to be a deferred annuity, where you can actually give money to an insurance company. They'll invest it maybe at a fixed rate, or it could be variable or indexed annuity. But it's basically going to grow tax deferred. You're not going to have to pay any taxes on that growth until you physically want to start to get it at the money. The other version is an immediate annuity. This is where you might want to start creating a monthly paycheck for you. You're going to give a lump sum to an insurance company, and they're going to give you a monthly or annual income. And then usually you can make it so that you can never outlive it. You could tie a spouse onto there, so if it can be you and your spouse and never outlive the money. Or you can just say, hey, I want money for 10 years and then it's over. So those are basically the two types of annuities that are out there.
Oh, so how do taxes work?
Well, what ends up happening is that, let's take this deferred annuity. When you defer an annuity, what ends up happening is over time, you know, if you had a 5, 6 year, 7 year surrender charge schedule, maybe you want to move that annuity from one type of insurance company to another. And traditionally, that was going to be a taxable event. So what the IRS did is they said, well, if you still want it for your benefit, you can do what's called a 1035 exchange. So you don't have to pay any taxes on the gain. You're going to move it from one annuity over to another. And then you may incur another surrender charge or another waiting period again, but you're not going to have to pay any taxes on the transfer.
Okay, so that sounds good, avoiding taxes, but we're talking about death and taxes also. So what about what happens to that annuity when you die?
Yes, well, this is where all those pent-up gains are probably going to have to be paid at some point in time. And unfortunately, your beneficiaries may have to pay taxes on that. And a lot of times at death, what will occur is they're going to have to pay taxes on the lump sum or whatever those gains are. And that could be huge because we're in a marginal bracket society. The more you make, the more you have to pay. So what happens is back in 2013, the IRS came up with a law and they basically said, you know, if you have died with an annuity and there's a good amount of gains in there, so your beneficiaries could potentially have to get hit with a lot of taxes, what happens is we can do this post-mortem 1035 exchange. And what will happen is then the owner of that annuity could now become the beneficiary. And then what they can do is instead of paying all those taxes in one lump sum, they might be able to stretch it out over their life expectancy as well. They'll have to take some income out of that annually, but they may not get hit with that huge lump sum all at once.
That would be good. That's the tax avoidance part. So does that happen automatically when a person dies?
You know, it doesn't. Basically, three things have to occur. One is the beneficiary has to be aware of this to try to request it from the insurance company. And usually it's not with that same insurance company. So the company that holds the existing annuity would have to allow a post-mortem 1035 exchange out, and the other insurance company would have to accept a post-mortem 1035 exchange coming in because the ownership on both are changing, and that's the key.
Okay, so it's important which company you pick. So it is complicated. Sounds good, but it's complicated, but it can be worthwhile. So you have a way for our viewers to learn something more, right?
Yeah, because we're just scratching at the surface. So what we did is we're doing an education program in my Valley View office, and the program is going to be on December 8th at 6 p.m. and Thursday, December 10th at 1 p.m. These do fill up fast, so if your viewers are interested, please give the number a call and we'll get them into the program. All
right, great, thanks. Annuities can provide income and in some cases avoid unnecessary taxes. To learn more, attend one of Jim's seminars or give him a call. The number is next.
For more information, call the Lineweaver Financial Group at 1-888-313-4009 or click to www.lineweaver.net.